What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide technical analysis to get you prepared for the week ahead. So I do provide a little bit of insight into what I am looking at as far as earnings events, and then I have another breakdown as far as technical videos. But this particular video is going to be different. Now, I haven't generated a video over the weekend. There was starting to be a collapse of the Japanese market here on last Friday. And so, with that being said, this morning we've gotten news about Powell or the Fed are scheduling an emergency meeting. This is something I have been talking about. So, this video will be different for this week, as all the other events have essentially been overridden. Something I've been talking about, if you've been following me to this point, is that this would not be a scheduled event. There will be an emergency meeting to start cutting. And that's what we were seeing with a massive gap down in crypto, in all the Mag 7. At this point, what you need to be doing is essentially marking all your major supports and buying at those major supports in that list that I've been talking about, that you should have generated in your top cryptos, top stock market businesses that you really want to buy on this dip. I have heavily weighed in on AI, humanoids. Tesla's been my number one pick in leading this thing out. I think crypto will be as well. But with that being said, you need again, and this financial advice, and again, this video is very different from what I normally do. You can look at some of my previous videos, how I break down the analysis, and then again how I break down the technicals. But this particular video is an emergency video. I've been traveling over the weekend and watching as again the Japanese market started to collapse on Friday. Now we are starting to see the major collapse this morning with a lot of the big stocks, as the market is, again, you have to understand the way this is going to be breaking down is you are going to get emergency cuts. And over the next couple months, the next about 2 months, you're going to see a massive gap down. That's when you start buying again at major supports. And what this video will be, again, is a breakdown kind of where those zones could be for the stocks that I am looking at on this dip. Again, if you have other stocks, again, focus on those. But again, you want to be buying brands essentially that are well known, because this is going to take a long time to recover. But over the next couple months, it could get really, really nasty. So, with all that being said, this is what we got going on. So the SPX gap down essentially on Friday, and then because of non-farms, essentially have pointed to that we are in a recession. We got this even back on the last non-farms. I talked about this indicator that has been Solomon indicator that has essentially been 100% accurate, and it was, again, with the revisions that are currently going on, it has already occurred. Now it is quote unquote official in the headline news. And so we started getting gap downs, market crashes on Friday when it came to the Japanese stock market. Now, again, this thing is going to accelerate as essentially the Fed are going to start panic cutting. Now, again, depending on how big of a cuts that they start getting is going to be the concern. And this is something that we've talked about. You need to be paying attention to, because when the Fed start taking action, it's going to be time to start buying bonds, as the bonds may start gapping up over the next couple of days. We'll find out when exactly they're going to start doing that. But again, everybody's been waiting on that bond play for a very, very long time. I've talked about the debt ceiling that's been removed, and that the market's been propped up because of that. Strictly your GDP numbers, your employment numbers. This thing will get very, very nasty very quickly. So again, you have to give this thing kind of like 2 months, and not just go in today and just start buying everything. You want this thing to, it's going to start happening over the next 2 months, and it's going to go again. A correction could be on average about 42%. So you have to keep that in mind. It's not saying it will, but it could very well go over. You have to understand we've been dealing with a lot of very historical numbers because of the printing. So you have to keep that in mind. We could go very, very low. We can go 80% from here, especially with a lot of the big tech companies. these are things you have to pay attention to. So again, this video is very different than what I normally do, but we need to provide technicals. I need to provide some in-depth discussion because of what's currently going on, and understand the pace at which you need to be buying. Again, at this and the certain levels that you're looking at. So again, on this, the daily here, as we can see, the market gap down on Friday. It is gap down again, so expect this thing to potentially even open up the 52. Ultimately, what I'm looking at when I start seeing rate cuts and stuff, I start looking more towards where the 200's at. Your daily is currently sitting at the 5100, and your weekly is let me go to a higher time frame here on the weekly. These are monthlies. Actually, before we do that, let's just take a look at the monthly. The monthly right now is currently sitting at the 29. So ideally, what you're looking at is closer to this range. Not saying it will, but again, when you break that 50, again, you're going to get some bounces off of this. And understand, again, this is going to be over the next couple weeks. You're looking at about a 2-month window here that this thing's going to be selling off. So again, you want to slowly ease your way into certain positions. You don't want to just be buying automatically. But again, you can even set essentially orders at these specific levels just to capture it. And then again, the deeper it goes, understand you have to pace yourself, because again, this thing's going to start getting pretty crazy pretty quickly, especially with now the market panic. So with that being said, again, ultimately what we're looking at the 20 here for the monthly. So the 47 is going to be your major support. So you will get some sort of a bounce there. And then ultimately understand, if we start buttering levels, that's telling you that there's panic. And given what has happened over last Friday and essentially the rate cut announcement or emergency meeting that's been announced, you're going to have to understand that, again, some of these top line supports like the 20 might get a very slight bounce, maybe if any bounce. The 50 will give you a little bit more support, but again, understand once you hit that, you'll bounce back up or attempt to try to bounce to 20. If you are getting very weak bounces, what I'm expecting, this thing will turn over. Once it starts getting under the 50 and retest the 50, you want to start looking at the 200. And you're going to get a massive sell-off at some point when it starts breaking this 50 mark. And then again, this is when you want to start heavily buying, when it starts getting in this zone down here. Again, this is just the general index. So if you're looking at your individual stocks, which we'll get into, that's when you're going to want to start buying. But again, been a lot of talk, in 42 is the average. So we're going to look at that real quick. If TOS would like to work with me today, that would be great. So 42 on average is 42. So you're looking roughly around the 3,200. This is something we talked about a while ago. So that could technically, we'll put this as our target. It's not saying it will hit that, but you need to know where that line is. And we will make this a different color just because we already have that color. We'll make it that color, make sure the price is on the right. So essentially that's what we're aiming for. If we start correcting, the 32.47 is where our target is. It's not saying it can. When we break the 50 and we start selling off heavily, that's when you really want to start buying heavily, roughly around there. Again, not financial advice. It could go much lower than that. And again, 42% is only on average. So again, you're dealing with historical numbers. We don't really know where this thing is going to hit. And depending on the pace in which we start selling off today can really determine how quickly that's going to happen. Again, you have to understand that since the cut, we've essentially been skyrocketing up. So I've talked about this. We've essentially started to pause rate cuts here at the 42 level just before we broke a very important essentially 4,200 level, and we start just going up. So now you're going to start retracting a lot of this move. So you can expect this thing to probably come crashing down pretty quickly down to the 47. Then ultimately understand if it breaks that 50, you're going to get some massive selling down, and then understand this level here is really your heavily buy zone whenever you start getting around this level. So whenever you break that 4,300, that's essentially, or the 4,200, between the 43 and the 42, that's going to be your major buy zone right there. So just keep that in mind. So you do need to pace yourself. This is what I talk about, pacing yourself. When you start getting at that level, again, you are dealing with a major correction. Again, during the pandemic, this thing sold off massively within 2 months. And so you have to kind of set that pace for a 2 month window on this thing starts selling off heavily. That's why I'm doing this video very differently, because none of the other events matter at this point. What matters is the market is crashing because of interest rates, and you're going to starting to see massive layoffs when it comes to what's currently going on. You're going to see a lot of headline news that's going to start feeding this thing more and more and more. Now you got essentially the headline news of a crash, and that's going to start hitting, and then you're going to see a lot of panic selling. So that's why I say you got to really pace yourself. And again, let me understand, it could be about a 2 month window as it starts to really start selling off. Again, you're going to have a very lagged effect on whatever interest rates. It's going to be about a year when these interest rates start going. But again, the market can price that in very quickly. So you do need to keep that in mind. And so over the next 2 to 3 months, the market's going to sell off very heavily. Because of all the headline news. Again, the housing, if you're looking at houses and automobiles, you got the housing market's going to be a couple years as that starts unfolding. But understand that the market is very agile and can price in those kinds of things very quickly. It'll take about 2 months or so, 3 months for it to price in. And then the market will recover a lot quicker than the economy will. The economy will, you continue to see a lot of bad news starting to come out over the next 6 months to a year, and then before the actual economy starts turning around. But again, the market will price all that in very quickly. So again, our target is the 3,200 level. We'll see what happens there. Again, it's not saying it will hit that. That's just on average. Again, on average. So you need to keep that in mind. Now let's jump back to the daily here. Big thing, we're going to look at Bitcoin. Bitcoin selling off. I said this would happen. That you're going to get a massive dip on this thing before the last major run up. So again, I think this can even hit 45. It could even go lower than that. When I always talk about before you get your major bull run, you're going to start getting a money printer back on and everything like that. But again, you have to give it time. And again, we've seen this with what's happened in China. This happened just months ago. He said it would happen overseas before it would happen here. That's exactly the way it is playing out. You have to know your cycles. You have to be patient for these things to play out. So again, looking at the 45 level, again, this thing could still come even lower. You got another small zone here, roughly around the 35 level. So you're going to be watching all these zones. I said that you would get massive consolidation, you get a massive dip down, and then that would be your final run for this thing to start running back up. So just keep that in mind. So again, be buying the dips on certain levels. Don't just be randomly buying. Again, you got to pace yourself. If these things find a floor, they'll start holding. So that's what you need to look for as well. But again, we're really watching these particular levels here and seeing how this does play out. So if you have listened to me this far, you have a lot of money, you need to slowly again start buying as much as you can and let this thing play out. But again, make sure you're pacing yourself and not rushing into these things, because we don't know if essentially the 3,200 level is it. That's just on average. Again, it could go 80% from there. It could even come down even further than that. Again, the Great Depression been compared to the Great Depression because of what's currently going on. So those are things that you need to pay attention to. Again, like I've always stated, Bitcoin isn't any different. You're dealing with the economy. Cryptocurrency is the same thing. Everything is going to crash all at one time when there is panic out there, when there's blood in the water, essentially at this point. Now, I've talked about TLT for quite a while. I said when this thing really starts to go panicky, when they start rapidly cutting rates, you really need to be paying attention to this. Again, we've already kind of gapped up to this point, but you're going to get your massive move when those cuts happen. Now, again, if it's a 50 to 100, basis point move, that will dictate how much of a gap this thing will have. So don't think that this thing's going to magically run all the way back up to 179. But you got some support here at the 99 level. I think this thing could at least try to gap up to the 129. So keep that in mind. So today I will be looking for some potential bond plays, especially with that emergency meeting. We need to know when that is, and then let that dictate kind of where we're going from here. So just keep that in mind. Again, this is a lot of information, but I've been prepping you for this over the last couple months, and I told you it would be an emergency rate cut. We just had monetary policy last week. Obviously, nothing happened. Powell was the same. Again, you got flash warning signs. I've talked about the non-farms on the last non-farms, saying that you had your sign that you were officially in a recession. Now it's actually a quote-unquote official, because it's now the official numbers. And understand that the revisions that have been occurring have already told you this months ago. And again, I've been pointing to earnings and everything else, and that's why I do this channel, is because of that. And now is the time to really start watching this. So, and you had some really weird movement going on Friday with bonds and everything. So it was already showing its hand well before anything started being essentially out there and essentially being told, right? So as far as gold is concerned, we'll have to drop down to the hourly because we are early morning. Gold isn't going to be as strong again. It will be strong going into before you start really getting panicky. But once things start to panic and things start to crash, everything comes down. And I've talked about that multiple times as well. So gold, in my opinion, that play is already passed, in my opinion. So now what you're really looking for is dip buys on a lot of these things. Tesla is already opening up about 195, so it's holding this support right now. Can buy a little bit here. I do believe this can potentially see 160 again. So again, you're going to have to pace yourself. It could potentially even hit 100 and wick back into this thing. You have to understand when there's emergency rate cuts, these things can get quite wacky. So you do have support here. I wouldn't be surprised. Again, these are weeklies and monthlies, so I won't be surprised if this does attempt to try to get 100 and potentially wick back up very quickly. That's what I'm saying. Got to be buying at certain levels. The 198 mark is a good mark, and then again the 166 would be a mark for Tesla. And then again, I wouldn't be surprised if this thing wicks down to the 100, or essentially starts making its way down there, and then maybe only lasts a couple days and wicks right back into here, and then starts chopping as this whole thing starts to play out, and then potentially start ripping up. So again, you got to mark these zones and you got to start buying in them. Let's start looking at some of these major ones here, like Amazon. Amazon is another really big one I do like. Looking at the 146 level here, looking at the 120 level, and then obviously anything below 100 would be ideal for Amazon. So that's something you also want to keep in mind. Shopify is another big one. It's actually finally broke this trend. I really like Shopify more around that $25 level. Again, I talk about this all the time, and a lot of people think that the market will just continue to go up, but that is not the case. You need to have these, they only last for so long, and then there'll be some sentiment that will change the market and flip this thing. So you have to be mindful of that. So aside from that, let's take a look at Apple here. Apple, massive sell-off. Your major supports, there is some support roughly around 200. Ideally, I really wouldn't start buying this to 169, and then again 150, and then you're kind of looking at the 137 levels. Nvidia, there's a lot of Nvidia people out here. I wouldn't really start looking at this until it breaks. You can start looking at it around 89, and then your 75 level. Ideally, you would really like it around here, around the 42 level. I think that's very much a strong possibility. You're going to essentially remove a lot of this market cap. This is why we did essentially stock splits over the last couple of years with a lot of these Mag 7, is to try to preserve stock price as this is occurring right now. So do keep that in mind. But see, Google is another big one that has already started to sell off. So your levels for this are really looking around the 137. I'd start looking at this, and then you'd start looking at the 120. And then again, your major support is down below 100. If any of these Mag 7 get below 100, they're definitely, or Google maybe not, but some of these are really, like Meta has a strong potential possibility as well. Can't really bet against Zuck as much as I don't like Zuck, but the company does very, very well. Another big buy here, 322. But the problem here is if this breaks this 322 level, you're really kind of looking at the 200 level as where you would really want to start buying heavy. And then if it gets anything below that $100 mark, something you're definitely going to want to watch. A big safe haven is Microsoft. Some Ideally, what you're looking for here is kind of that 334 level, and then anything below that, you may have a little speed bump roughly around the 290, and then heavily around the 237. Again, you got to pace yourself because there's going to be a lot of panic going on, and so you want this thing to sell off a little bit. Give it a couple days. Before you really start looking at any of these, so just keep that in mind. Obviously, we want to look at BA. It's starting to break down. The biggest level here, I'm not a BIA fan, but the 122 level, and again, anything around that $100 level is where you want to start heavily buying. If any of these Mag 7 start getting around the $100 level, you really want to start looking at these. SoFi is another big one I want to really look at. Again, the big level for SoFi is kind of around that 425 mark. Can really start getting heavy buys around that level. So that is one I do want to start looking at as well on this downturn. And again, financials will get hit a lot quicker because of what's currently going on before anything else. So let's take a look at JPM. JPM is going to be important on this drawdown. Again, correction, 75% of this move. We've seen that. I talked about these ascending wedges. So you're looking roughly around the 157. I think this can go even lower down to the 130. And then again, your major support is roughly down here. Roughly down here around the 107. Again, understand if we get around this level, it can continue to sell off. So just keep that in mind. This is why I talk about pacing yourself. This thing is going to start selling off heavy over the next month, and then really start looking at it. So take your time as this thing comes down and start slowly buying. Don't just buy a bunch of stuff at one time. Give it a little bit of time. So just keep that in mind. And then this video was already 22 minutes. Again, I don't want to get into too many of these because let's take a look at Palantir. Again, really looking for it to break the $20 mark. I think this thing could potentially sell off to the 13, maybe even down below 10. Anything below 10, I think, is a buy for this. But again, ultimately understand this thing could really start selling off. They sold this thing off heavily when things weren't going so great either. So you have to keep that in mind. This thing has gone all the way down to $5. If you can scoop it up at $5 again, be buying a lot of Palantir. But ultimately, what we're looking for is some of these major levels to break. We really want this $20 level to break first, and then we can really start looking at buys for this. Ultimately, we want it to break out of this channel, which I think it will very easily happen. Let me actually take a look at the hourly here. Yeah, see, so we're already starting to gap down a lot of these. So ideally today we should break that 20. As you can see, this is why I go off the hourly. I do like to watch this for entries at the hourly as opposed to anything else. So, but you're ultimately once it breaks that 20, you want to start getting it slowly buying this thing. Ideally heavier at the closer to the 10 than anything else, and then ultimately understand it can go down to 5. So just again keep that in mind. In Tesla, we'll take one last quick look at Tesla. As you can see, it's already starting to everything is gapped down this morning because of that. And then ultimately we want to see how big of a cut is going to come from the Fed. So that is what is ideal. But that's pretty much what I have. Again, ultimately, you need to keep this in mind. And what I've already stated is that I told everybody that this would happen. I told everybody that this wouldn't be a scheduled event. I told everybody that, again, what you're going to happen. Again, this overrides everything because now at this point, you're going to start getting panicky. You're going to start seeing crashes. You're going to start seeing all these people panic because of what's currently going on. And so with that being said, um, you're not going to know, no event's going to override what's currently going on right now. It's all about the Fed. It's all about how much they're going to cut. If it's a 50 point or 100 point, that's going to dictate how much the bonds are going to move. So you're going to want to be paying attention to that. They will announce how big of a cut that will be, and then understand that the market will start really selling off, because that means that they have to essentially disclose why they're cutting, right? Because all the nonsense that's been going on, all the dog and pony show stuff that's been going on, you have to understand this is why they're cutting, and they're going to give you that reason, and they're going to say how many points it's going to cut by. It's going to draw a lot of panic in the markets. You're going to start seeing a lot of selling. So just be prepared. Ultimately, understand you got about a 1 month, 2 month window. But today, in the next couple of days, the market is just going to start seeing a lot of blood in the market. So you have to keep that in mind on this whole thing that was about ready to play out. So with all that being said, remember to like and subscribe, and I will get this out. Again, apologies I didn't have over the weekend. I've been traveling all weekend, but ultimately everything was kind of playing out over the weekend because this overrides everything anyway. And so this video needs to come out, and I will get this out to you guys. And again, remember to subscribe, as we're going to start looking for a lot of these zones. Again, everything's going to be overridden by what's going on with the Fed. It doesn't matter who has earnings. It doesn't matter any of these things at this point. When big events like this occur, it does not matter about what is scheduled for the event. You just need to know when and where to buy, and then just be prepared. So with all that being said, have a great day. I'll see you guys on the field.